Welcome, everyone, to the Predictive Playbook. This is the Financial Markets Edition, where we talk with Steve Merril and, of course, myself, the host, about the financial markets and the synergies and the similarities between sports betting markets and the financial futures markets. We started a live $50,000 account, and that is up pleasantly $28,000. And a lot of you that are new traders and new sports bettors may be scratching your head thinking like, well, the market's getting killed right now, and how can you be up 28,000? Well, you can make money just as well with down markets as you can with bull markets, and that's what we're here hopefully to share some of our experience. I've been trading a long time, and so has Steve, and I think we have a lot of value to provide for you to take advantage of. Steve, how's the week been? I really haven't had a chance to catch up with you since football started.
Yeah, it's been busy. I mean, football's been great. We went 7-2 on a Saturday, Sunday, and Monday. And then, of course, I'm a systematic trader with the financial markets, so I set it and forget it. I take about 15 minutes each night to adjust my orders on a daily basis, so that doesn't take up too much time. But they've been jumping around, and as far as the trend following goes for me, it's down a little bit the last few weeks. I think it's a lot of times that turmoil. I've been getting whipsawed. For rates, for example, 10-year and 30 years, I keep getting long, keep getting short, and it's the whipsaw, and that's part of trend following, and it's the dues you have to pay. You take those 1% to 2% losses, and you look for that home run. And I've been long equities for 8 months or so, and I've told you I've been reluctantly so. I finally got to turn over last week. The S&P turned, and the Russell turned first, and now just a couple of days ago, the Nasdaq is finally short for me. I'm liking to be short these equities, and we've seen this happen a few times, a hard Monday down, and then a next day is up hard. And it looked like it was happening for the third straight time this past Tuesday, but then it crashed. It didn't crash, but it closed right back down in the last hour or so on Tuesday and ended up being like a doji. So I think that was a real interesting indicator. We are getting a rally today on Wednesday. I think if it doesn't continue, if it goes back down tomorrow and Thursday, I think we really could see a 5, 10, 15% drop in equities. So I'm short the equities now with the trend following method, but as a fundamental side of things, I'm comfortable. So we'll see. I think that's something we definitely want to look at here for our account as well.
Yeah, I agree. The BitCoin put in a rather historic bearish engulfing candle about 10 days ago when the talk was that some of these Central American countries were going to abandon their currency and use Bitcoin as their macroeconomic currency of choice, and the market really tanked on that news. And I don't think we're really anywhere close to being prepared to make Bitcoin or any of them a national currency for any country, especially one that is underdeveloped. A third world macroeconomic country using Bitcoin is unimaginable, and I think that would hurt them a lot more than staying with the currency they have now. But the market did not revert back right away. It's kind of drifting a little bit. Then we had Monday and Tuesday were big sell-offs. We're having a rally today. But to our credit, Steve, you and I were right on when we broke through 32. It traded up through 38 then. And based on the style mile profile that we showed, and we will be showing, this is pre-recorded, so we will be showing charts on the version that you're watching. And the style mile profile now is completely filled in. And it's a question now whether 38.5 and that area of support is going to hold. I got to think, Steve, that if we have a little bit of a meltdown here Friday into Monday especially, Mondays are, usually if it's bad on Friday, it follows through on Monday. And sometimes you do get a bottom on Mondays, but it usually is an acceleration and you get that capitulation. I don't think we're there. I think we're going to be lower Monday, and we'll just have to see how it goes. But if you're right on the call in the S&Ps, then I got to believe Bitcoin's going to be trading at 35 or lower. It's not going to take much to get people running for that sell door, and the sell door is only so wide, and you can't get everybody through that sell door, That's what causes the Bitcoin to trade so violently up and down. Like that engulfing candle was, by itself, the one day was 27% range from high to low. I mean, that's pretty serious stuff. And I don't think there's any market I've ever seen in the futures market that's been that wild.
Yeah, and that was back, on September 7th, basically. It opened on
Yep.
the 6th and the 7th. And, yeah, it was a high of 53, a low of 43 that day. Almost a $10,000 range, $9,500 range. What's interesting, too, is if you look where Bitcoin is right now on Wednesday, September 22nd, the bottom for today was about 40,000. Now it's back up to about 43. So it did take a little bit of a spike down, hit that key level of 40 and bounce right back up. And if you look all the way back to the weekend of August 6th, actually 7th and 8th, August 7th and 8th, about a month and a half ago, that weekend, it closed that Friday at 43, and then it reopened at 44 and hit 46 by the end of that Monday. And it's never been back down there until now, basically the last couple of days. So it basically filled that gap, that weekend gap between 42 and 46. So
That's
I
right.
do think this is a critical level right now, which this is either going to be a long-term support, or if it does drop, and close for several days at 42 or 40, this could become the ceiling, like you said. And it's interesting also, we always talk about Bitcoin is not correlated to anything, but it's looking like it's becoming more correlated to the S&P, like you just said. This past Monday, when we had the big, heavy 3% down in the equity markets, Bitcoin had a big down day as well. So, I still think, it's somewhat of a standalone asset, but like you said, there's a lot of speculators, and we've talked about this on other shows. All these day traders, the 30% new accounts that opened last summer in 2020 when there was no sports betting, these people have done nothing but win for like 14 straight months now, whether it be the meme stocks or just being long the
Yep.
S&P or the equities. And that's why it falls faster than it rides. It's like a roller coaster, tick, 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 boom, tick, 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 boom. And the 4% downs, we've had the quick corrections. And it looked like we were having that again yesterday, as I said, on Tuesday, and then it ended up finishing flat. I really think the risk reward is tremendous to the downside right now. It might end up going higher, but it just looks like each new time high over the last couple months has been exhausted, very weak, and it's been rolling over. And I know you and I have been anxiously awaiting a time to get short the equities. I think this looks like the best opportunity we've had so far since COVID.
Yeah, it's an interesting pattern today because I'm looking at it here as the chart, and today you did take out yesterday's low, and if we could possibly close above yesterday's high, which is just a shade under 4,400 basis the December futures, it would be interesting to see if you got any follow through Thursday and Friday. But there's big time resistance at 44.10 up to 44.15, and I think that's where I would like to started reestablishing that short position we had. And in addition to that, I'll show a chart which will be on the show that people are watching now, where it will be an option strategy using the SPY, which is the biggest ETF on the planet. It's a Vanguard created that particular ETF, and it's very liquid, and the options are extraordinarily liquid. And it'll be our first bear spread. So we are going to use that as an example, a case study of how you can hedge your IRAs. You don't have to worry about how much they go down, but set up an option trade that will protect the gains that you have in that IRA as much as possible. And if the market would tank, like Steve had mentioned, I'm with him on this, 10%, 15%. You'll actually be making money with the option trade and offsetting any losses in your IRA by extra amounts. Because the lower it goes, the more value increase there's going to be in that option trade. So it's a pretty exciting time actually, even though it's on the negative side. And always remember, folks, when markets go down, they go down much, much faster than they go up, and it's violent. So when we do these trades, it's in trend following, it's hard to screw it up because it happens so fast, And I'm not talking about your whipsaw, Steve. I'm just talking about getting out too early, or you can let it run much, much easier than you can on the way up.
Yeah, and just also just looking at the S&P cash, the actual daily price, which of course takes out the overnight trade. I'm just looking at the 9 to 5 or 9:30 to 4 p.m. to be exact, Eastern each day. The previous 2 weeks, basically within a couple points, closed at a weekly low. But the last 2 weeks, the S&P closed at a low basically for the week within a couple points. Not a good sign. And then if you look at the close last Friday, 44.3, 44.30, and then it opens 4,400 basically this week. So there's a gap if you look at just a daily, just 9 to 5 chart. And today is basically, right now as we do this live, middle of the afternoon Wednesday, it's basically at the weekly high. So we'll see if it wants to fill that gap between last Friday's close and this Monday's open, because of course, and then we went even lower. So, but you're exactly right. I mean, if it doesn't fill that gap, it's a real bad sign of the bear. But if it fills that gap, which it normally tries to do, that's a great opportunity to go short or get out, lighten up your long portfolio. See, that's the thing too. You said, like, how can it be a good week for us when the market's been going down? Well, there's 40 different markets I trade. I mean, the S&P is on like 1/40th of my account. Metals are moving, currencies, the rates, as I mentioned, have been kind of whipsawing. Commodities, we have the whole inflation argument, and this whole transitory inflation thing is ridiculous. I mean, the consumer price index up like 8% again. It's like the record high for the past year. So there's lots of stuff going on, but I know most people, they're long the S&P, they're long the stock market and their retirement accounts and everything. So either move a little to cash or do some hedge strategies like you said. But yeah, we're at a real critical ceiling right now. We'll see if it tries to fill that gap. But if we look at just the daily chart of the S&P cash, there's a gap between Friday and today, and we're right at that ledge. And a lot of times it tries to fill the gaps, and then it goes right down from there. So there's some good opportunities, if not now, even maybe a little bit higher, to find a short position if you haven't gotten it already.
And if I have the time, I will construct a bear spread with options on Apple, because Apple is severely overdone. It's topped at 156 and currently trading up today at 146, 147 area, which is optimal on the chart. So I wanted to mention that as well. And it's not just Apple. There's a lot of charts out there that are not looking so hot right now, and sentiment. It's just like in the NFL. You have 80% of the bets on one team, 20% of the bets on the other team, and lo and behold, the unpopular team wins. We've seen it already in the first 2 weeks, and the same thing happens with trading. You get 85% bulls, and for whatever reason, the market then tops. When you have nobody and their brother wanting to be bullish, that's when the bottoms are made. So it's a human behavioral analysis. Really, it's fascinating as all get out.
Well, and I mean, Apple's a textbook example. Apple is the market. I mean, it's the biggest company of any index. I mean, it makes up a tremendous amount of the S&P percentage-wise as far as the 500 companies. It's unbelievably overweighted. And if you look at the chart, like I'm looking at it right now, it's basically 100% exactly what the S&P chart looks like recently. So it's very important to keep an eye on that one, because it's a great company, but people are heavy in it. And once again, it's not about winner. It's not about good or bad stocks. The reason this stuff goes down fast is because you have to sell your good stocks to cover your bad stocks. So, it's a self-fulfilling prophecy. And that's why Bitcoin also, as I mentioned earlier, a lot of speculators still that have done nothing but win for 14 months in Bitcoin and the S&P, they're going to have to sell some of that Bitcoin maybe to cover their day trade stuff when AMC or these meme stocks start to drop like they will. So that's why be careful with Bitcoin. It's going to be more correlated to the S&P than we've seen probably from past charts. And when what hits the fan, it hits across all markets, and it happens fast. But yeah, we'll talk more about this maybe tomorrow on Thursday. We'll squeeze in another quick one.
That sounds good. Thanks for your time, Steve, and we look forward to seeing everyone here at Manny's Pub at 4 o'clock. So for Steve, myself, thanks for listening, and enjoy the rest of your day.